If you missed the last video on why you don't want to miss the opportunity of Bitcoin, I will link that somewhere down below. You can go check that out. But today I just want to basically reiterate why Bitcoin is really the play that you need to be in the next 5, 10, 15, 20 years. This is a report that was done by River.com, a research report called What's Driving Bitcoin Adoption in 2025, and there is a ton of valuable information in here. I'm not going to go through all of it, but I want to touch on some key things in this. A lot of this has some huge implications for why Bitcoin is going to be the best asset class to be in the next 15, 20 years. So I first want to talk about this slide. It's basically talking about the supply growth of the US dollar, gold, and Bitcoin. And when we talk about supply growth, we're talking about the amount of something in circulation. And what you can see here, if you look at the US dollar, they're basically printing money at a rate of 6.8% annually. So when we talk about inflation, they say that inflation is only 3%, 4%. That's hogwash. It's at least 6.8%. I believe it's actually higher than that. But if you strictly go by this, let's say that it's 6.8% according to this statistic right here. Gold, you can see they're adding about 2 to 3% into the supply every year, and that's just from mining gold. And of course, as the price of gold goes up, then it's more profitable for miners to mine, so they're going to mine more. And then for Bitcoin, because we know there's only 21 million Bitcoin that will ever be created, every 4 years the amount of rewards get cut in half, and that's going to continue on that cycle until 2040. And so last year in 2024 they only added 0.85%, less than 1% to the supply of Bitcoin. So the supply of Bitcoin is almost to its max. It's just going to be infinitesimal additions over the next essentially 100 years, 120 years. But Bitcoin as a monetary system continues to function as desired with zero downtime over the last decade. 94% of the 21 million Bitcoin have already been mined. So that's a big deal. When you look at the ownership of Bitcoin, what the distribution is, you can see 69% of the supply is owned by individuals. Now 4% of that supply is Satoshi, which essentially will likely never be utilized. And that was when the Bitcoin network first got launched. Satoshi was a miner at the beginning. Nobody knows who Satoshi is. The wallet has never been touched. The suspicion is that it never will be touched, that nobody knows the keys to that wallet. So 4%, you can almost look at that 4.6% of the supply as being burned Bitcoin that's not actually able to be used. Also, there's 1.57 million Bitcoin that has been lost, so people losing their crypto keys and no longer having access to that Bitcoin. So really, if you think about it, it's really 21 million minus 1.5 million minus almost another million, so 2.5 million. So we're really looking at about 18.5. Is that right? 18. Yeah, about 18.5 Bitcoin that will ever be in circulation. So that's a pretty big deal. Very few businesses are actually transacting in Bitcoin. 914, well, nearly half of that is all MicroStrategy. And then funds and ETFs are very small, 1.29 million Bitcoin, and governments 297. I find this slide incredibly encouraging as far as the price of Bitcoin goes. And what it says here is that previous cycles of Bitcoin accumulation, so this is talking about people who are buying Bitcoin, were driven by individuals. But when you look at 2024, exchange traded funds and businesses were the primary Bitcoin accumulators in 2024. So you can see here ETFs hit 519,000 Bitcoin, businesses added 374,000. What that tells me when looking at this is that up until now, the majority of Bitcoin purchasers were just individual everyday Joes that saw the value in Bitcoin and begin to buy and accumulate that. Now, and this is why I say we are still early in Bitcoin, the ship is still at the dock, hasn't even left yet. now the majority of the buyers are businesses and ETFs. That doesn't account for governments that are buying this. So when you think about that, right now, we already saw in that last slide that it's a very small percentage of businesses that are buying Bitcoin, and that small amount is already higher than everyday individuals buying Bitcoin, and we haven't really even taken off yet. 52% of the top hedge funds and RIAs, which are registered investment advisors, own Bitcoin ETFs. So that's saying that half of all the hedge funds and investment advisors own Bitcoin. So hedge funds and registered investment advisors collectively manage over $135 trillion in the U.S. alone. While total exposure exceeds 30 billion, allocation size remains relatively small. So this is what's big. So firms with more than $1 billion in assets under management, that's 143 funds, 458 investment advisors. But look at the percentage. Weighted Bitcoin allocation is less than 1%, really less than 0.25% of their entire portfolio. The same thing with investment advisors, 0.02%. That's incredibly small percentage of exposure to Bitcoin in these funds. As I mentioned earlier, we are so early in Bitcoin adoption. Bitcoin will soar to higher and higher prices, even though right now we're in a drop, right? It was 96,000 or 100,000 for a while, and it's dropped down to, I think, about 87, 86,000 as I'm recording this right now. But businesses have accumulated over 1,000 Bitcoin per day since January 2024. That's incredible. 1,000 Bitcoin a day, businesses are buying up. Now, obviously, a lot of that is strategy, or formerly MicroStrategy, adding Bitcoin. But you've got miners that are adding 93,000 Bitcoin. You've got other public companies. Mara is one that is acquiring Bitcoin. Private companies. So it's pretty incredible how many companies are adding Bitcoin. Public company holdings of Bitcoin grew by 80% in 2024. So businesses are starting to recognize that cash reserves that they have will continue to decline in value because the U.S. continues to print money day after day, year after year. So what they're doing is they're basically taking MicroStrategy's strategy and implementing on their own. So they are taking those cash reserves and buying Bitcoin with them, because by doing that, they're ensuring that that cash that they have sitting there will continue to rise in value compared to the dollar, which is declining in value. This is another statistic that I found interesting from this study, basically showing that Bitcoin custody has become more secure. So in the early years, 2011, 2012, 2013, there was a massive amount of Bitcoin that were lost through hacks, internal thefts, bankruptcy. Everybody remembers Mt. Gox, if you've ever heard that. But ever since then, if you look here, 2014, 2015, only 10% of the losses occurred after 2015. So businesses and individuals are getting much better at securing their assets. You can see how small the losses to hacking and compromised exchanges happened in the last couple of years. Very small. And most all of those losses were to just negligence, either on the individual's side or on the exchange's side. This is another thing that I think is powerful for just the Bitcoin industry and exchanges as a whole. Proof of reserves is becoming the industry standard, and this is the idea that unlike fractional reserve banking, where you deposit money in your bank account, and now, ever since they changed the law, banks don't have to hold any cash on reserves. Most of these exchanges now are starting to do what's called proof of reserves, essentially showing that whatever Bitcoin we have that we're showing as deposits, we actually have that amount on deposit. So we're not sending it off somewhere. We're not using that to try to make money in the background like FTX did. So you can see a lot of these exchanges, River, Binance, Bitfinex, BitGet, Bybit, Gate.io, Kraken, KuCoin, River, all of these, Crypto.com, are basically proving that, hey, there's this much Bitcoin in our deposits, and here you can see, look at these wallet addresses, you can see that we actually have that Bitcoin. Notice that Coinbase is not on here. Just another reason why I don't ever recommend holding Bitcoin on an exchange. Always create your own self-custody wallet, buy it on an exchange, send it there. If you do that, it really doesn't matter what exchange you use. Just buy it and immediately send it off the exchange, and you should be pretty good, unless something happens in that short window from when you buy it and when you send it off. If you still haven't bought Bitcoin, you don't know how to buy Bitcoin, I've created a Skool community. Right now it's completely open. There are no fees to join, and there's a course in there that walks you through the whole process of buying Bitcoin, how to buy it, and how to self-custody, store it in your own wallet so that you don't have to worry about anybody stealing or confiscating your Bitcoin. So if you're interested in that, I'll put a link down below. You can go click on that and go over there and learn how to do it for free. I've said this before, and I just want to reiterate it. What do you think is going to happen to the price of Bitcoin when nation states, when countries begin to say, just like they stockpile gold, they say, you know what? We need to start stockpiling Bitcoin because there's only ever going to be 21 million, and we need to have a piece of that action just for our own sovereign security. There are not that many nations, 18 nations, that are estimated to own Bitcoin. El Salvador is actually the only nation that's actively buying Bitcoin. Most of the others, like for instance, these ones are mining Bitcoin. These ones, including the United States, have seized it. Like the United States seized 198,000 from the Silk Road website they shut down. And then you've got other companies. North Korea is hacking and stealing Bitcoin. But again, 18 nations are owning Bitcoin. But when one of these large nations, United States, United Kingdom, China, Russia, any of these countries say, you know what, we're going to start buying Bitcoin, what do you think is going to happen to the price of Bitcoin? Again, we are so early on Bitcoin. This slide alone, I think, is one of the biggest things to come out of news for Bitcoin, and that is the repealing of SAB 121. Essentially, what SAB 121 was, it was a rule that essentially said that banks, if they wanted to hold Bitcoin, they would have to show that on the liability side of their ledger. Meaning that if they had $1 billion in assets and they had $500 million in Bitcoin, they really had $500 million in assets. Well, with the overturning of that rule, essentially the way it works now is that if they have $1 billion and they have $500 million in Bitcoin, well, now they have $1.5 billion. Basically allows them to show Bitcoin as an asset. What it also did for banks is it allows them now to begin custodying Bitcoin for their customers. This alone is going to have a huge impact on the adoption and price of Bitcoin. Think about this. One of the biggest downsides to people adopting and buying Bitcoin is that it's perceived as being difficult. It's not anymore. It used to be. But it is no longer difficult to sign up for an exchange, buy Bitcoin, and send it to your own wallet. But there's still friction there because you have to sign up for an exchange account. You have to do KYC, you have to verify your identity. If you could just log into your bank and maybe you've got $50,000 in savings and you can say, hey, let me take $10,000 of the savings and buy Bitcoin with it, and just click of a button, now you've got $10,000 in Bitcoin, $40,000 in savings. That alone is going to be huge for the price of Bitcoin. It will make things so incredibly easy. And not only that, but think about the financial products that can now be built around Bitcoin. Say that you end up having, again, I've said this before, I believe Bitcoin's going to millions of dollars. Let's say it goes to $5 million. And let's say you buy, 10%, 0.10 of a Bitcoin. So you've got a tenth of a Bitcoin. At $5 million, that's $500,000. So let's say that you want to buy a house. You've got $500,000 in Bitcoin there. Rather than taking out a traditional mortgage, you could actually put your Bitcoin up as collateral. It could be locked up within the bank. They could loan you the money to buy that house. That's better than securing that loan against a piece of property, because there's not a foreclosure in the traditional sense. They would just have to go to court. get a judgment against you, and then since they already have the Bitcoin, they simply get the courts to approve transfer, and now they take control of the Bitcoin. And that's just one piece of this chart. Look at this strategic Bitcoin reserve. Trump has talked about this, creating a reserve of Bitcoin strategically for the United States. If that happened, that would be incredibly bullish for the price of Bitcoin. And then even this. So right now, every time you sell Bitcoin, there is a taxable event that happens. But what if small amounts, less than $200, aren't taxed? The 2022 Loomis Gillibrand Responsible Financial Innovations Act first proposed exempting small Bitcoin transactions from capital gains to encourage everyday use. Senator Loomis is now chairing the Senate panel on digital assets. So he is one that is in charge of or chairing that panel. We could see small Bitcoin transactions be exempted, in which case, why would you want to take payment in anything other than Bitcoin? If Bitcoin is going up on an average of 50% per year, while the value of your dollar is declining by 15% per year, one asset's going up 50%, one asset's going down 12%. Hey, if I can buy most of my stuff with Bitcoin and not be taxed, give me my payments in Bitcoin. I'd rather have that. This is why Bitcoin is so undervalued right now. Even at $87,000 per Bitcoin, it is incredibly undervalued. And this says U.S. investment advisors currently have a net Bitcoin allocation of just 0.006%. So all investments that advisors are managing, they have less than 1% of all of their allocation. No, not even less than 1/6,000% allocation in Bitcoin. So if you increase the Bitcoin's current percentage of global wealth to 0.2%, so we're talking about going from 0.006 to just 0.2%, not even a full percent of all the global wealth, if that was turned into Bitcoin, it would require a 36x rise in Bitcoin exposure. So if you think about that, Bitcoin right now is $87,000, and we're going to increase that exposure 36 times, which in theory should increase the price of Bitcoin 36 times. That's a $3.1 million Bitcoin price, just by taking stocks, government bonds, corporate bonds, cash equivalents, alternatives like gold, commodities, that kind of stuff, and converting that into Bitcoin. Just a small percentage, going from 0.006% up to 0.2%. Just simply doing that would likely cause the price of Bitcoin to rise 36 times. Less than 4% of people own Bitcoin. So that's basically 1 in 25 people worldwide own Bitcoin. So you can talk to 25 people that you know, and if we're talking worldwide, maybe North America, here you go, 10%. 10% of Americans own Bitcoin. So you can talk to 1 in 10 people that you know actually owns Bitcoin. There was a time when 10% of Americans had an email address, and now it is practically impossible to find somebody that doesn't have an email address. Bitcoin is going to do the exact same thing. If this doesn't make you realize the potential of Bitcoin and understanding that we are still early on, think about this. When the internet first came out in like 92, 93, when people actually had it in their home, people thought it was useless. There's a famous news report on TV where somebody talks about sending email. They say, why would that ever happen? I can send a letter. Why would I need to send an email to somebody? And then it was less than like 6 to 7 years later, the internet just exploded, and you can see where it has gone in just the last 25 years. We're basically in that early 1992, 93 phase where the internet was with Bitcoin. We haven't even begun to rise. There is a huge potential coming. If you don't understand how to buy Bitcoin, you want to know how to buy Bitcoin, there is a link below. You can go check out the Skool community. Again, I'm going to leave it free till the first 50 people join. Once 50 people join, I'm going to increase the price a little bit. And then as more and more people join, obviously the price will continue to go up. But if you get in now while the price is free, you will be in free for lifetime. I'm going to publish content there. I'm going to create more trainings to show people how to do different things, DeFi, and just understanding blockchain technology at a fundamental level. So anyway, thanks so much for watching this video. I hope you got something out of it. If you haven't, follow me, subscribe to me. I will see you on the next video.